Essar Oil is on a tear. They came out with a good set of numbers. GRMs, which is the most important benchmark for a refining company, they've expanded, but there is also a one-time huge bumper. Yes, bumper forex gain of about 350 crore. Lalit Kumar Gupta, Managing Director and Chief Executive Officer of Essar Oil joins us. Mr. Gupta, good morning and thank you for joining us. 350 crore of one-time income. Looks like your treasury has got the hedging completely right.
No, Nikunj, okay, let me start with the numbers first and then I'll come to your question. On an year-to-year basis, we have crossed the turnover of 1 lakh crore benchmark this year. So now we are a 1 lakh crore plus company in terms of revenue. In terms of GRM, this year we are 7.98 versus last year we were 7.96. EBITDA wise we are 4,700 crore plus this year against 3,600 crore. Profitability, yes, we are 126 crores net profit versus 1180 crores loss last year. But we should not forget that last year was the first year when we started our refinery after expansion and modernization. In the first quarter we have got a huge loss due to commissioning expenses and change in the crude prices, etc. So on a year-to-year basis it is quite comparable to last year. Yes, as far as this quarter is concerned, we have everything which is right. To begin with, as you said very correctly, the rupee appreciated. And when rupee appreciates, we get some MTM, which is not a real gain. But what happens is that whatever is our uncovered forex liability for which we have natural hedge, we end up getting the MTM in the books. So out of about 314 crores, roughly about 200 crores is something which actually is an unrealized MTM. So which is on account of entries. Now other than this, the GRM number is very good this quarter, 10.12, and as I said, everything was right. We had unprecedented cold in US, which actually improved the demand for gasoline, gas oil, and also for a product which we only uniquely produce and sell. Generally it's not a very good profit making product, which is VGO, but this quarter that product gave us very good margin. So this quarter overall was very good.
So Mr. Gupta, what happens the next quarter? Will you be able to sustain the GRMs at the current levels? Because next quarter the weather in the US will be absolutely okay.
You are absolutely right. Although we don't give any guidance for the future, all I can say is that yes, rupee continues to appreciate. That's a good thing. But the new refining capacity coming up in Middle East and China, that's a challenge. In India also, I think MRPL has now got stabilized post expansion. That's a challenge. And you're right that unprecedented cold weather is no longer there in this quarter onwards. So all in all, let's see how it turns out.
Would it be a significant dip in your GRMs next quarter?
No, as I said, we don't give guidance, but there are certain factors which I shared with you. Those are there which will have some impact on GRMs.
What has been the GRM trend
we can only
this
come
quarter?
to know
because what we are discussing with you are numbers for the quarter gone by. We are almost 60% done in this quarter.
No, we have to wait for another 40% of the quarter and then another one.
So I'm not asking you for a forward guidance, I'm asking you the current number.
The numbers in the month of April has been generally, in line only, not very different. But we have almost 40-50% of the quarter is still remaining, and the gas oil cracks have come off a bit. And the refineries are coming back after maintenance. A huge capacity had gone for maintenance. In fact, one of the region of last quarter was that a big refinery in east was under maintenance, which actually inflated all the margins. So that refinery is also coming back. And as I said, that new capacities are back. Refineries are coming back after maintenance. So let's see another 40 days and then come back.
What will be your total refining capacity by end of FY15, because you've expanded your India operation, Middle East kicks in. What could the picture look like by end of FY15?
As far as we are concerned, we are done with our capacity expansions, and we are now 20 million ton refinery, and we have been consistently operating this at 20 million ton quarter after quarter. You must have seen that we are 5 million ton plus. So we are not going to have any increase in capacity expansion, but as far as others are concerned, there are 2 or 3 refineries in the Middle East which are coming almost of 20 million tons capacity each. MRPL has got stabilized. Then Chinese also are adding lot of capacity. So all these capacities are going to come this year. So it's let us see how much the world grows to accommodate these capacities.
Right. Mr. Gupta, also talk a little bit more about how your debt levels are currently, and if at all you have any fundraising plans going forward.
Now currently our debts are to the tune of, as of March 31st, our debts were about 17,000 crores, and if you add another roughly about 2,000 crores of sales tax liability which is still to be paid. So all in all we had about 19,000 crores of debt on our balance sheet. We do not have any further fundraising plan, but definitely the dollarization which is pending, we have been able to dollarize $1 billion up till March. Rest we are in the process, so somewhere next year or so we should see some more dollarization happening, but no further borrowing as of now.
So final question, bulk of your capacity expansion, or I would, like you said that most of your capacity expansion is over. Your capacities have already kicked in. Refining capacity would move up, which means your cash flows would improve. So are you in a position to retire your debt? Would you be considering that?
Certainly, Nikunj, what we had said always was that we are done with our capacity expansion. There is no major capex which is pending now, except the Optima Plus, which are low cost and high reward schemes. So going forward, whatever we generate, and that is mostly going to be used towards liquidating the debts only.
Okay, Mr. Gupta, good chatting with you. Really appreciate you taking the time out and speaking with us. 16% higher, that's still where Essar Oil is. Good numbers. But yes, the GRM sustainability, that comes into question because the GRMs got bumped up because of bad weather in the US this quarter. Take a look at Morning Ispat. That is one story.